I work with the Communications Department at the IMF. I'm here today with Abibe Amro-Selassie, the Director of the African Department of the IMF. So I'm going to give the floor to Mr. Selassie for a few opening remarks, after which we will open up the floor for questions. Thank you.
Thank you, Mira. Good afternoon, everybody. Thank you again for joining us today for the launch of the Regional Economic Outlook for Sub-Saharan Africa. Before I take your questions, I want to just briefly lay out recent economic developments in the region and the policies we feel are needed to facilitate stronger growth. Growth in Sub-Saharan Africa is expected to pick up, though at a slower rate than previously envisaged. For this year, we are projecting growth at around the 3.2% mark, rising to 3.6% in 2020. Relative to April, we have seen growth revised down for about two-thirds of countries this year, albeit by a modest 0.3 percentage points for the region as a whole. By and large, this revision reflects the more challenging external environment and some country-specific circumstances. For example, policy uncertainties are holding back investment in some of the larger economies in the region. Furthermore, I think I would like to stress that growth prospects continue to be quite varied across Sub-Saharan Africa. In particular, non-resource countries are expected to grow at about 6%, almost 3 times faster than the growth rates that we're seeing in the more resource-intensive countries. Reflecting this, 24 or so non-resource intensive countries, home to about 500 million people, will see per capita income rising markedly faster than the rest of the world. In commodity-reliant or resource-intensive countries, however, growth is at around the 2.5% mark. For these 21 countries, in per capita terms, growth remains lower than much the rest of the world. In addition to the outlook I just outlined, there are some downside risks that we see. On the external front, of course, this risk relates to rising protectionism, potential rising risk premiums in financial markets, and faster than anticipated slowdown in trading partners like China, the Euro area, should it materialize. And then other risks are related to failure to implement fiscal policies as envisaged to help stabilize debt levels. Against this backdrop, a three-pronged strategy can help reduce risks and promote sustained and inclusive growth. I think first, the near-term policy mix in countries needs to be carefully calibrated. In general, fiscal space is limited in countries. Thus, the room for supporting growth in the face of external headwinds remains mainly on the monetary policy side, particularly for countries where inflation remains below target and growth is also below potential. Second, countries should continue to build resilience to economic shocks, in some cases increasingly frequent weather-related disasters, and heightened security challenges in other parts of the region also. This, of course, requires continuing to strike a balance between investment needs and avoiding debt sustainability problems, making sure that public fiscal management remains effective, avoiding the buildup of domestic arrears and other challenges that we've seen, something that we cover in our regional economic outlook. And importantly, continuing the efforts to diversify economies to reduce reliance on commodity exports. Third area where we feel some attention is needed to is, of course, to continue to make sure that growth remains labor-intensive, to be able to create jobs for the millions of people that are entering the labor market each year. Opportunities for reform include, measures to facilitate the implementation of the AfCFTA now that it has been ratified by most countries in the region. Another area where some attention is needed is facilitating competition between firms and enterprises in the region. Again, some analytical work we've done this time around in our regional economic outlook shows the significant potential that there is to facilitate competition and raise growth, improve welfare by promoting faster competition between firms. Before I end, and we open the floor for questions, I would like to stress that we remain of the view that Sub-Saharan Africa remains a region of tremendous potential, And while the global environment remains, has become somewhat uncertain, there is much that countries in the region can do to boost growth and resilience to external shocks. Finally, I want to also put a forthcoming conference on your agenda. Together with the government of Senegal, the fund will be hosting a conference on sustainable development, sustainable debt on December 2nd in Dakar. The objective of the conference is to identify policy proposals and approaches to address how best countries can strike a balance between addressing development needs and avoiding debt vulnerabilities. A lot of the analysis that I spoke about is in our regional economic outlook, which has just been published today. Thank you very much.
Thank you, Abe. And for those who already don't have a copy of the Regional Economic Outlook, we have one right here.
This one?
Yes, that one. And you can either access it online, or if you don't have it, we have copies outside, including copies of the opening remarks, also in French and Portuguese. So I'll open the floor up to questions. Please, can you keep it short and cite your name and the institution you belong to? Thank you. The lady in the front, Leah.
Hi, my name is Leah Katung Babatunde from Nigerian Television Authority. I would want you to speak about the AfCFTA, now that countries have signed. What policy framework do you see member nations coming up with to ensure that the desired target is met? And with Nigeria closing her land borders to neighbors, do you see it in any way impacting the nations neighboring her? Then I also want you to speak about inclusion that the IMF has been talking about, female inclusion, the clamor for gender balance, how you perceive it to be playing out, especially in the workplace in Sub-Saharan Africa. Thank you.
Thank you. On the AfCFTA, this is one of the most exciting policy developments across the region in recent months. I mean, we covered this extensively in our April Regional Economic Outlook. We did quite a bit of analytical work in there. What it showed is that there is tremendous potential from the initiative that can help facilitate higher economic growth. One of the things about intra-Africa trade is that when our countries are trading with the rest of the world, we tend to export natural resource commodities. So Nigeria exports oil to the rest of the world. But trade between countries tends to be that of manufactured, more processed goods. Partly, of course, this is because most countries produce natural resources, so they don't trade that with each other, but they export it. So, it's a kind of trade that we want to facilitate, and the AfCFTA, I think, will do that, subject to tariffs, of course, being lowered, which is what the agreement deals with, but also other barriers to trade being opened up. So one is like non-tariff barriers. Even without tariffs, there tends to be barriers. Other things that hamper trade is infrastructure. So that also needs to be addressed. So again, I think it's a major initiative, important, but now the hard task of making sure that it's implemented is going to be important to facilitate the trade that we need to see between countries in the region. On the border closure in Nigeria, which has been impacting Benin and Niger, our understanding is that the border has been closed, reflecting concerns about smuggling that's been taking place, illegal trade, not the legal trade that you want to facilitate. So we're very hopeful that discussions will resolve the challenges that this illegal trade is fostering. To be sure, if the border closure was to be sustained for a long time, it's going to definitely have an impact on Benin and Nigeria, which of course, on Benin and Niger, which of course rely quite extensively on their big brother next door. So we hope that there will be a resolution to that. On gender balance, promoting that. I mean, I think it's fair to say that over the last several years, we have increased our focus, our attention to the inequality, gender inequality in the region in particular. In terms of policy interventions that is needed, unfortunately, we still see some policies that are in place that hamper the full participation of women in the workforce. Women's ability to inherit land, to have access to financial services. So I think the first policy priority really is to make sure that there are no policy-induced barriers to women's participation in economic life to a full extent. Once those have been eliminated, or as those are being eliminated, I think there's also other more traditional type barriers that need to be addressed. So I think working on those will also be as important, because even when you have an environment which is gender neutral, there still remain we still see gender inequality being quite pervasive in some countries. So addressing those will be important. And then third, quite frankly, I think consideration will need to be given to more positive interventions to make sure that women's participation in economic life, in political life, remains as strong as it is. As our managing director points out, you cannot have a vibrant economy with half the workforce being kept out or not participating fully in the economic life of our countries. So it is, not just an advanced country, an emerging market issue, but something that, if anything, is even more prevalent in our region. So again, this is something that much attention is needed to.
Thank you, Abe. David Lauder from Reuters, please, the second row.
Can you please?
Second row.
Okay. Hi, thank you, Abe. I just had a question about the trading environment for the countries in Sub-Saharan Africa. Obviously, growth has been slowed throughout the world because of the U.S.-China trade war, but I was wondering if you could go into some of the specific effects that it's had on countries that are trying to break into global supply chains and to get an upgrade of their manufacturing. Has this have they been able to take on some of the production that's left China, or is this more of an overall negative for those countries, and what are the factors? Thank you.
I think it's important to disentangle more medium term versus the conjuncture on this trade issue. So I think first point I want to make is that Africa has not been immune to the slowdown in global trade volumes that we've seen over the last year or so. So, as trade volumes globally have declined, and what we have seen is some softness in exports from the region to the rest of the world. So that is something that has happened at the same time that global trade has slowed down, and is something that is a source of concern. And in fact, it has, I think, contributed somewhat to the lower growth that we have seen, the softness in growth outcomes that we are expecting this year. So, on the conjuncture, the region has been, I think, impacted somewhat, albeit to a lesser degree than elsewhere. On the more medium-term story about shifting of, low-skill manufacturing, highly more labor-intensive manufacturing type jobs to the region, we have seen some of that happening. I think the most notable case, perhaps, is Ethiopia, where we've seen some effort, concerted effort by the government to try and attract these jobs to the region. In other coastal countries, along the eastern seaboard in particular, we have seen some of that. I think going forward, it's almost inevitable that this will continue to happen as China, Vietnam continue to move up the technology ladder. I think the next place where there is abundant supply of labor, where labor remains relatively cheap, is in Sub-Saharan Africa. So that migration we have begun to see, but I think it's still early days yet. I think there's two forces at work. I think on the one hand, what will determine how quickly this happens. On the one hand, how quickly the Asian countries move up the technology ladder, and then on the other hand, kind of how rapidly countries are able to attract capital and to these kind of areas. So I think it'll be interesting to see how these dynamics play out. But at the moment, we are still, I think, in the early stages.
Okay, the next question, Ramat, which is the lady in the third row, please.
Thank you very much, Mira. Good afternoon. My name is Rahama Saidu. I work for Radio Nigeria. The IMF has been a critic of what they call a very high debt profile between Africa and African nations and China. And for us, the only way we could develop our infrastructure will be through foreign direct investment. So I'm wondering if the IMF will come up with something that will make the loans from China less attractive to African nations. And secondly, on Nigeria, the present administration has put in place so much economic policies to make things better, but unfortunately, the growth seems to be so slow. How will IMF intervene to change Nigeria's fortune? Thank you.
I don't know. I don't know why. First, I don't agree that IMF has been a critic of China. I mean, so just to be very precise about this. The amount, China has been a very important development partner for many countries in Sub-Saharan Africa, and that's our headline assessment. Now, are there some countries that have borrowed extensively? And this is not just from China, but from all other sources of financing, either through the issuance of Eurobonds, from domestic markets, or other sources of capital. Yes, there are countries that have borrowed, beyond what they can quickly repay. But just it's important that that we get this story straight, that China has been a very important partner for many countries and remains so. Our concern really is more about the overall debt level, and even not just about debt per se, but two other things. One is once you've borrowed money to invest in infrastructure, in health, in education, being able to capture the rate of return on that investment so that the debt can be serviced. So how, what use you put the debt to, how effective the investment projects that you're undertaking really is the important part of the equation. And then second, always, to try and strike this balance between addressing, the tremendous development needs countries have and avoiding debt becoming unsustainable. So that is our concern, and those are the issues which we discuss with countries. What can the IMF do? I mean, we, work with the 45 countries in Sub-Saharan Africa. That's covered by my department, through a range of modalities. In some countries, we have programs where we provide financing when countries want it. We, of course, provide policy advice to all countries. And capacity development also, in specific areas, and including on debt management as countries request. So, we try and help countries strike this balance as much as possible, and providing they ask us to come and work with them. So, on slow growth in Nigeria, it has been, for the government has initiated the ERGP, which I think has outlined many of the weaknesses, many of the constraints to growth in Nigeria very nicely. I think what's needed is really to implement that to the fullest extent, and we look forward to the new administration doing that. I think, on the fiscal policy area, for example, I think the budgetary area, it's going to be really important that the government increases non-tax revenues to be be able to invest in the infrastructure the country needs, in building, expanding university education, expanding health sector health service coverage. So, government needs a lot of resources to facilitate a lot of the investment that the government needs to make. I think also there's scope for reforms to make sure that you have a business environment that facilitates more private investments. And we, are discussing with the government and trying to provide policy advice as much as we can.
Thank you, Abe. Walter, the gentleman in the fourth row on the side.
Thank you very much. Good afternoon, ladies and gentlemen. My name is Walter Naji from Nigeria Television Authority. All right, so just recently, the ECOWAS Commission had outlined their intention to float a common currency among the ECOWAS Commission, and they came out with a template of what the currency would look like, and we're hoping that, of course, that will take effect by shortest possible time. My question really is, what will be the impact of this single currency in the region? And then secondly, there's been this outcry of issues concerning insecurity in the region, talking about xenophobic attacks in some of the countries, and how does this affect, trade treaties between the countries, and how can it be surmounted? Thank you.
Okay, thanks. On the plans for a new ECOWAS currency, I think the leaders and the ECOWAS Commission have done the right thing in laying out very clearly what the preconditions that need to be put in place are for the creation of a currency. So those preconditions, of course, already include convergence criteria and making sure that you have some real convergence, economic convergence, before you move to creating a single currency. And I think it's important for following the steps and the conditions that have been laid out there as countries move towards creation of this currency. So we look forward to see how that is being implemented in the coming months. On the xenophobic attacks that you mentioned that have taken place in some countries and unfortunately have resulted in the loss of so much life, I think it's a big challenge. Where it's been taking place. I think, I don't know what to say other than that, of course, making sure that remains contained, much less spilling over into bigger disputes is going to be really, really important. I think there's a big element which is criminal, and so I hope, policing and better understanding between our people will tackle that.
Thank you, Abe. The gentleman in the first row, please, right here. Simon?
Thank you. Excuse me. Thank you for taking my question. My name is Simon Ateba from Today News Africa, Washington, D.C. Still on the free trade, the Continental Agreement, I want you to react to worries that the big economies, Nigeria, South Africa, Ghana, and Ethiopia, and the rest may wipe out economies in other countries in terms of stronger manufacturing and exportation of goods. And then finally, I would like you to tell us the impact of climate change in the African economies. We already seen some of the effect around the Lake Chad Basin, where you have millions of people affected at the risk of starvation. And do you think that Africa is ready for the green or the blue economy? Thank you.
Thank you. On the first question about the possibility that, as you put it, the bigger economies dominating markets in the region, I don't want to, of course, it can be a problem, but the smaller economies have opened up their markets to China, to European countries, and the like, right? So, even assuming that Nigeria or Ethiopia will dominate their sub-region, is it preferable to be dominated by China rather than Ethiopia, Nigeria? I don't know. I mean, so, I just want to, yes, I mean, as always, when you have structural change, there is a dislocation, there can be, losses in some sectors. I think the key thing is whether it's opening up to China or to Europe versus to Nigeria. I think the key really is about making sure that you have policies in place to support sectors that may be dislocated, and that, in general, the more competition, other things equal, tends to be a bit better than having the situation where when you're not trading with each other. So that's how I would think about it. Again, it's not to minimize the potential source of dislocation, but I think there is steps that can be taken to make sure that you address potential areas that are dislocated. Climate change, it really is, of course, something that we think about all the time. In our work, I think we see the issue both in a short-term sense, but also more medium-term perspective. In the near term, how it affects our work is the number of countries that are being impacted by climatic events and natural disasters, which seem to be getting a bit more frequent, or I don't know if it's simply that we're recording and being more aware of them. So most recent one, of course, is Cyclone Idai, followed quickly by Cyclone Kenneth, which hit Comoros. So we are trying to provide support to countries as they are being impacted by these shocks as quickly as we possibly can. I think. So that's one way in which we're dealing with the somewhat uncertain climate. Right now, of course, we have a drought in southern Africa. We're trying to assess the impacts of that in countries like Zimbabwe, Zambia, and giving policy advice and support there. And then there's the more medium-term issue, more medium-term challenge arising from things like, the desertification that is happening in places across the Sahel. People are attributing some of the population pressures, the tensions that you're seeing to population movements induced by climate change, trying to understand that. How can government policies be more climate resilient? How can investment be more climate resilient? We are trying to think through these things and support governments as much as we are able to.
Thank you. Kemi, lady in the first row here, please.
Thank you. Kemi Oshikoya from the Africa Bazaar magazine. Health is a major part of the social welfare that you mentioned. But at the same time, within the past 5 years, Sub-Saharan African countries have experienced Ebola outbreak across 5 major countries, including the current outbreak in DRC. In 2014 and 2015, you were in charge of helping to give funds to Liberia to help them deal with the Ebola outbreak. My question to you is, what is the IMF recommendation to African countries in terms of policy and investment to address this particular sector, to ensure that when there is an outbreak, or any major pandemic in Africa, they can address those issues, because the healthcare sectors, as you know, are not getting adequate investment and policies.
Thank you. So, we're not health specialists, nor kind of work directly with the health sector, but we of course, work with countries to try and provide, to make sure that they have, enough resources that they can, so that they can invest in health, education, infrastructure that they do. So when I say, so we don't, I'm not, I would be giving you very ill-informed answers there. What I can say is, I think the countries that were really impacted by the Ebola outbreak were countries that also, because we've had Ebola outbreaks in places like Uganda also. When the outbreak happened in Guinea, Liberia, and Sierra Leone, there was also some spread into Nigeria. The countries which had better health infrastructures were able to deal with it quite quickly and address it, squash it and very quickly. So I think fundamentally the way we can make our economies resilient to pandemics like that really is by generally upgrading the health quality, health service provision, and improving state capacity in dealing with incidents like this. So the primary way we help countries really is by making sure that they have enough resources from taxes, from loans, to address their health and development objectives.
Thank you. Okay, Bani there, the lady in the third row, please.
Hi, Bani Sapra with the Associated Press. You spoke a little bit about how trade tensions were creating a challenging global environment for economies in Sub-Saharan Africa. I was wondering if you could speak a little bit about the policies that can be used to kind of shelter economies from these external headwinds a little bit more. So, like, which fiscal and monetary policy, which has the most potential to kind of protect?
So, as I mentioned earlier, I think I would say in the lion's share of countries, the scope for using a more supportive fiscal policy stance at the moment is constrained because debt levels have been going up and there's a need a little bit more to focus on stabilizing debt levels. That's the thrust of policies, and I think that should be sustained. So we tend to see more space on the monetary policy side. We've seen inflation rates generally trending down across the region. In some cases, it's even below target. We've also seen more stability in exchange rates. So we see more space on the monetary policy side. Now, if the downside risks we talked about earlier were to emerge, however, so we see a much more pronounced global slowdown, then I think there will be a little bit more scope to reconsider the calibration of fiscal policy. So maybe delaying by a year or two the planned adjustments. So over the medium term, you still get debt to be coming down, but not immediately. But under the baseline, under the current projections that we have, we see more space on the monetary policy side rather than fiscal.
Thank you. The lady in the second row here, please.
Thank you. My name is Hope Moses Ashike from Business Day, Nigeria. IMF is projecting 11.7 inflation rates by 2020. So my question is, what are the drivers of this inflationary rate? And then what are your recommendations on how to control it? Thank you.
So, on inflation in Nigeria, I think it's a mixture of a range of factors which are keeping inflation at the level it is, despite growth being low. This, of course, includes countries still adjusting to the impact of lower commodity prices, and that adjustment was more gradual. It wasn't immediate and really started in earnest the last couple of years. So I think some of that adjustment to the very high inflation that you saw when the exchange rate was adjusted is still playing out. I understand also there's been some shocks related to food prices and the like. I think, frankly, just keeping on what the central bank has been doing over the last couple of years, continuing to bear down on inflation to make sure that it can gradually decline is the way to go. We don't think that monetary policy is particularly, is badly calibrated. Far from it. So I think just continuing giving time for inflation to decelerate is what's needed.
The lady in the second row, please, Renee.
Good afternoon. My name is Renee Volgraaf. I'm with Bloomberg News. You mentioned in the beginning of your talk, and it's also a line from the Economic Outlook today, that the implementation of this free trade agreement has the potential to boost medium-term economic growth for the region. Obviously, all the steps that's going to be taken to implement this trade pact. Has the IMF done calculations to see the extent to which it can boost growth? You know, if the baseline is a certain number, how much can it add?
Yes, I mean, we have actually one of the analytical chapters in the April Rio was very much on the AfCFTA, and we have a lot of outreach material related to that online also, so I invite you to look at that. If memory serves me right, our estimate was that growth, trade, intra-Africa trade, would be increased by at least close to between 16 and 20% or so as a result of the AfCFTA, but once you factor in, of course, other factors, it could be higher still. But again, you know, beyond the volume, the increase in trade, I think what's also really interesting is this other element of the trade being in manufactured goods. I think a lot of the debate, the discussion in the region is about how can we facilitate more diversification, more higher value added goods being traded, and I think that's really also the other element that's exciting beyond just the increase in numbers.
Okay. The lady in the far end, Elena.
Thank you. I'm Elena from the Portuguese news agency. I wanted to ask about how the IMF looks to Mozambican economy, knowing that 2 years ago or 3 years ago, there was hidden debts that now are being taken to trial. There are more than $2 billion in the Mozambican debt that were hidden from the IMF, and that stopped the financial program that IMF had. So when can we know that how the IMF will bring again a new financial help to Mozambique? And also in the debt thing, the hidden debts thing, the Cabo Verdean government also are saying this month that there was hidden debts of 65 million that IMF suggested to be. Do you know something about that? Thank you.
Thank you. On Mozambique, when the hidden debts were discovered, we indicated that three things needed to be done for us to engage. First and foremost was a need for an explanation, an audit to try and understand how this debt came about and to what end the resources that were borrowed were used to. So there was an audit, I don't know if you remember, done by a company with the support of the Portuguese government, and so that process I think has played out, and also it's good to see more recently the prosecutions that have resulted as a result of the investigations that the Portuguese authorities and other jurisdictions have been undertaken. So I think that was one big, the audit and trying to understand what happened, and the transparency was a particularly important part that we were concerned about. Second element, as we noted, was as a result of those hidden debts, debt was in an unsustainable situation. So there needed to be a way to make sure that debt was brought out to sustainable levels. And then the third element was agreeing on a program that we can support, on policies that we can support. I think progress has been made on all those three areas. On the first two areas, there is no outstanding request for program engagement with the IMF at the moment. I think the country's been going through an election, as you know. But if there is a request for a medium-term program, we're happy to look at that subject to those considerations that I laid out. Now, of course, earlier this year, the country was hit by Cyclone Idai to such devastating effect in the northern part of the country, and we moved forward quickly to try and provide some support to the country in that context. So we dispersed some resources to help alleviate the impact of that. So our engagement by way of providing this emergency support and also policy advice has continued. Sorry, on Cabo Verde, I'm not aware of the transaction that you mentioned. We'll try and find out about that.
The gentleman in the very end, behind Elena, please.
Thank you very much. My name is Suleiman Mustafa, and I write for the Daily Graphic in Ghana. Over the period, you've seen some countries record trade surpluses, but those surpluses have not transformed into current accounts of those countries, merely due to capital flights that we've seen. Will you recommend that countries convert their domestic assets into foreign reserves, particularly for some African countries? And then again, Ghana, embarked on a very costly financial sector reform about 2 years ago, which merely cost the taxpayer about 12 billion Ghana cedis and resulted in the collapse of about 7 banks. What is the implication of not embarking on such a reform, particularly, considering the number of job losses that has come with it? Thank you.
So on the first question, I'm not quite sure I understood the question. If it's about why there is a discrepancy between trade surpluses and reserves not going up enough, it can vary from country to country why that is, and we can discuss perhaps bilaterally, and I can try and explain. On financial sector cleanup, the cost of cleanup in Ghana, I think it underscores why we as an institution put so much stress on making sure that banks are supervised, regulated as well as possibly can be done. I think given that many of our economies are getting financial sector development is really taking hold, financial sectors are deepening. The importance of upgrading banking supervision, banking regulation is going to be really, really important to avoid exactly the kind of situations that you explained. The alternative to not cleaning up the banking sector, of course, is an even bigger cost to the budget and also, of course, to the economy as disruption can be caused. So I think a central lesson, that's a really important takeaway, is the importance of real-time regulation to make sure that banks are adhering to all of the requirements to practice safe banking. Thanks.
Thank you, Abe. We'll take one more last question to wrap up. The gentleman over here.
Good afternoon, and thank you. My question borders on poverty in Sub-Saharan Africa.
Could you please identify yourself?
My name is Cliff Ayoze of firsthandnews.com.
Thank you.
The numbers in the area of poverty is quite frightening in Sub-Saharan Africa, and this has remained a concern with government initiating policies to ensure that we'll be able to lift a number of citizens out of that. One instance is that of Nigeria, where they have a 10-year projection to lift about 100 million people out of the extreme poverty. And yet, Central Bank of Nigeria is playing very critical role through interventions, and there are other intervention programs by government. What programs would you recommend that could fast-track the realization of this very projection, looking at the endowment in Nigeria, human, natural? Thank you.
Thank you. So, one of the things that strikes me about Nigeria is just the variation in both economic outcomes, but also development and social outcomes across this very, very large country. Yeah? So you have, in parts of the country, very, very elevated levels of poverty, very elevated levels of, infant mortality, maternal mortality. Really important indicators of well-being really are very high in some parts of the country, and in other parts of the country are, comparatively very low. So there's this big variation in poverty outcomes, economic outcomes, as you know, in your country. So I think a really important focus, of course, is, to try and identify those areas where these outcomes are really weak and perhaps, region-specific interventions are going to be needed. That's one thought. And the other one, of course, is just getting aggregate growth, overall growth in the country as a whole to be much higher than it is at the moment. Continuing on the diversification agenda will be really important in this regard. Reducing reliance on oil, which tends to dominate the country, having a business environment that facilitates investment, across the country. More policy certainty will all be important. And again, we must sound like a broken record when it comes to Nigeria. A key way in which, of course, the government can address poverty, can address, that challenge is by investing more in infrastructure, of course, but in health, in education, and that requires resources, and that can only come from higher non-tax revenues, which remain, of course, very low at 7-8% in the country. So, if there is, a single policy lever that the government could address over the next couple of years, it is this non-tax revenue. But this is not lost on policymakers, of course, and the 2020 finance bill is seeking to address that. Thank you.
Thank you, Abe. And with that, we are going to close this conference. Just to remind you, you have access to all the documents both online and a lot of data as well. Thank you.
Thank you very much. Thank you.